Well, hello, everybody. Here we are again on our weekly WWM podcast on April 4th, 2025. I'm Steve Wolf, and I'm joined today by Greg Carroll and Vince Stefano. Interesting week this week. The last couple of days have been a lot of fun, haven't they?
It has been a blast and a half.
I feel like I need an umbrella trying to get out of that, rainstorm. But Vince, why don't you tell us what the numbers say?
Well, the numbers are pretty brutal. The Dow year to date is down a little over 9%. And so, we're getting close to that down 10% in the Dow, which, is pretty big for 30 stocks. The S&P year to date as of today is down a little over 13%, almost 14%. And the NASDAQ is down over 18% year to date. And we're talking year to date. And the last 2 days have just been brutal.
The Dow was down almost 9% the last 2 days, I believe. Right?
Yeah. But it was actually almost it was hovering in the flat line for a while.
Right.
So it really got nailed. And NASDAQ right now is officially in bear market territory. It's down 20% from its December 16 highs. So
well, a lot of the AI stocks and the chip stocks have been in bear market here for longer than just the last 2 days.
Oh, absolutely.
They're really taking it on the chin. And really, those are the ones that went up the most, and now they're going down the most. So let's talk a little bit about tariffs, because that's obviously what the deal is here. And we've unfortunately now have a tariff war going on. We talked a little bit amongst us about, I'm personally hoping that Trump hasn't overplayed his hand. I know what he's trying to do, but I am not one who likes tariffs. I'm on record as saying that. And this is what happens. You get now China apparently came back and retaliated today. Trump apparently put 34% on Chinese goods, and China came back and said, well, we're going to put 34% on yours, which, of course, now that means we're behind because China had already had tariffs on our stuff. So now what do? You do it again? I don't think so.
Well, it has been interesting, prior to this liberation, is that what they call it on Tuesday?
Liberation Day.
Liberation Day on Tuesday or whatever. Before that, Trump was kind of going back and forth on tariffs. He was on again, off again, delaying things. But when he came out in that press conference the other day, it was pretty across the board serious that I think the tariffs were much higher than most people thought. And then that took the market down pretty steep yesterday. And then when China came out last night and said, like you mentioned, another 34% on top of the 15%, the market across the globe just said, wow, this is a battle. And who's going to blink first?
Right. Now, going down by 5% a day isn't going to happen forever. And more than likely, I'm going to guess that next week, I don't know if it's Monday or Tuesday, there will be a relief rally of some sort, because a lot of these stocks are getting pretty cheap.
Well, and that's the big issue right now. And a lot of people have been, now mentioning that the reason China put the tariffs on was to drive down our stock market so that they would instill fear and discord amongst the United States population, and they would, call their congressmen or senators and force Trump to redo the tariffs. The big question, though, is, and I don't know if that's true or not, there's rumors floating all over Wall Street right now, but, Steve, you're right. I mean, this tariff war has triggered a massive stock market capitulation, and they're throwing everything out. I mean, one day you're seeing, restaurants up, next to down huge, utilities up one day, down big the next day. And you were saying, we might be in for a relief rally, and, typically, markets bottom on bad news, not good news. So the big question is, when does the bad news stop? And if there is continued bad news, if the market doesn't go down further, then yes, then maybe you've hit some real support levels and you possibly can get a decent relief rally.
Well, the other thing, too, is that there is now a 100% certainty, according to, I guess, whoever buys these things, futures, that there's going to be a rate cut in, I think it's the next time they meet, is it May or July? I don't remember which. But 100% certainty according to, the futures markets. And then there's going to be another 2 or 3 rate cuts this year. So this is kind of interesting because I think that puts Powell in an interesting spot, in a tough spot, because generally speaking, when tariffs hit, and all tariffs are taxes. They're taxes on imports. So so if China wants to send something to us, or anybody wants to send something to us, we're putting a tax on that. I mean, this sounds a lot like the Boston Tea Party at one point when there was a revolution there. So let's hope that doesn't happen. But the tariffs are causing this increase in inflation, I think, or should normally cause that, because you've got higher prices. So now Powell's looking at this, and if in fact we see that prices are coming in higher, and more than likely they will in time, probably not tomorrow, but over the next few months, then what does he do? Okay, because you would think that the economy might slow, because that's what will probably happen when you overtax people. And now he's saying, but we've got inflation. That's called stagflation. But this is even worse than stagflation, to be quite honest with you. So what does he do? If he raises rates, that's going to slow that should help the economy, but
if he raises or lowers rates.
If he raises rates, if he lowers rates, or did I say raise?
You did. Yeah.
Okay, I'm sorry. If he lowers rates, okay, that usually will stimulate the economy, but that would cause more inflation. Okay, and if the tariffs are already causing inflation, and we're doing a lot of speculation here, we don't know that's the case. But he's in a tough spot, is what I'm saying.
Yeah, he came out. He was on record today saying that clearly the tariffs are having a larger impact, and that was one of the things they were going to be watching, and so that will cause him probably to react. And I believe it is in May, not July. It's every 6 weeks they meet. So it was March and then May. So. I think, the market's had a pretty dramatic sell-off this week. Most people's investment portfolios don't consist just of the stock market. You usually have, some other alternatives or bonds that help cushion some of the blows. So we're not trying to, instill any sort of fear out there. When you do look at your portfolios, the bonds have done very well. Unlike in 2022, where we had the worst stock bond market combo, bonds are actually doing their job this time.
Because interest rates are falling.
Interest rates are falling. The Fed's not bumping them up. They're likely to lower them, like you just mentioned, Steve. So, now is not the time to make big changes to a portfolio. If you have questions, obviously you should, consult with your advisor. But more than likely, you're probably in a pretty good position at this stage after the big sell-off that Vince was talking about. You're usually in there for the long term, and
I think you're right. I think that when you look at, and I've been looking at a ton of charts over the last couple of days of not only stocks in my portfolio but stocks that I have owned in the past and may want to own again. And I'm telling you that, I've been trying to find support levels for some of these stocks, and right now I can't find any. I mean, these charts are looking like waterfall charts, and I keep thinking, well, here's a support level, and it breaks the support level, and then it keeps going down. But I do think what you were saying, Steve, is that when we do have a turn, the turn has to be on an outsized, large volume upside day. If we can get that, then I think that the market can see some acceleration. But you really need an outsized volume day. We're seeing it, but we're seeing it to the downside. We have to, see it to the upside. And all those stocks you talked about, the AI stocks, other technology stocks, whether they're the Magnificent Seven, I don't know if they're the Magnificent Seven anymore, but a lot of those stocks that were up huge and people love them, they are so much on sale right now that we should love them even more, because I'll tell you, over the next 2 years, you're going to look, people that are buying now or nibbling now on some of these stocks are going to find out they have seen the best buying opportunity in a long time.
Well, we can hope that's the case.
And again, again, these stocks are these are the best stocks out there. These aren't these aren't rinky-dink little stocks. And we're talking the majors. We're talking the top 20 stocks in the world that have incredible revenue, earnings, free cash flow. They're the innovators of everything.
But one little chink in that theory is that if China decides that they don't want to do business with us, and what's happening inside of China, and we're not paying a lot of attention to it apparently, is they are having their own infrastructure. They're having their own supply chain. So someone who, wants to make chips goes next door and says, make the chips. Or, I'm using that as an example, and that may not be the exact example. But my point is that they may not need to go outside. And that's a different scenario. So now what happens to our companies that are exporting those things that China might use when, hey, they say we can do this ourselves?
Well, I guess that's been the problem with our politicians over the last 10 years that have exported so much of our manufacturing.
Well, that's right. And, it's funny because, why have they done that? It's, in my opinion anyway, it's because we keep raising the cost of labor. And the more we do that, the more they're seeking labor that's cheaper.
Right.
All right. So, you're making more money here, but ultimately those jobs that we're talking about, a lot of the manufacturing jobs are going overseas. And what Trump is saying is that he wants more manufacturing here, but I'm not even convinced that if you had more manufacturing here from a job perspective, that's going to be all that great, because a lot of the jobs that are in factories are being replaced by robots.
Right.
So now if you're in the robot business, it's a great thing. And quite honestly, this is one of the things that, we've talked about. What's going to happen in the future? Where is the money that you want to invest? And it's got to be in the new technology. Mm-hmm. So if they bring back, I don't know what, we're talking about, but if they bring back, let's say, another car manufacturing company, how much of that will be, automated? They're all automated now. Now, the good part about bringing some things back are things like for our defense purposes. If we have
national security type stuff.
Absolutely. Yeah. And I think from that perspective, it's a good thing. But it's going to be a little bit hard. And the other thing, too, is that you can't just bring something back and tomorrow you're starting a factory. It takes years to build.
Yeah, it does take years.
So this isn't going to happen in a day or a week.
There was an analyst that was talking this morning, or maybe it was yesterday, about, if they tried to make the iPhone here. He said it would probably cost $3,500 instead of $1,000 or $1,200 or whatever it costs right now. So to your point, Steve, the wages and to build these, factories and everything, it probably doesn't, certain industries, it probably doesn't make sense for.
No, but defense industry, we definitely need for defense. We need to be able to build whatever we need, whether it's planes or bombs or I don't know what.
The technology, the critical elements.
Although there's the other thing too. I'm wondering if drones isn't going to be the next real weapon that we use. It might not even be bombs or ships or,
Boeing just got a big contract for the next manned aircraft, fighter jet.
Right.
Which I was surprised because we've talked about it before. Why wouldn't you just make it a drone? You could have some, kid in a, trailer back here in Arkansas.
Well, wasn't that the F-35, which has been?
No, there's a newer one. That's
okay.
This is to make something different.
All right, I thought that.
So this is a better plane?
Better than the best one on the planet, according to these people. The F-35 is the ultimate, but they're going to make it better, is what the contract was
and here's the other scenario that's kind of going around. I don't know how many companies, and right now we're hearing that companies are calling the White House. They want to, negotiate with the Trump administration about bringing tariffs down or having zero tariffs. I don't know how many of the 180 or 190 companies that he imposed tariffs on.
Countries,
yeah, that he is actually going to that will actually call and want to negotiate much lower tariffs. If that happens, that's a good sign. So we'll see. We'll see.
Here's the thing. What should people do really with their portfolios? All right. First thing is you don't panic, no matter what. Okay, that's the first rule. Okay, or maybe it's the second rule. The first rule, according to Warren Buffett, is not to lose money. But you do
lose money. Yeah,
people lose money
only if you sell.
Yes, that's right. Right now, it's a paper loss. It's volatility. It's not a loss until you sell it.
Yep.
Okay. Now, there may be one or two things in the portfolio that are weak that you might want to sell and put that money in something stronger that's now on sale. I mean, okay, that makes some sense. But for the most part, you don't really want to be wholesale selling into a market like this, because every single time in the past, and of course you can't guarantee the future, but every single time in the past, it's always come back. And here's the thing. This has happened very, very quickly on the way down. And of course, markets go down faster than they come up always, because I think fear is a stronger emotion than greed. But what could happen is kind of what Vince, you were saying, and that is that other countries come to us, or we go to other countries and say, okay, let's negotiate. Because I think what Trump is trying to do here is saying, okay, here's what we can do to you guys. All right, now come in and let's talk. And I think that's what's going to happen. And if there is some capitulation between the countries, and we can only hope that sanity prevails, then all of a sudden this market could go back very quickly. Now, it won't go as quick up as it does down. It never does. But still, you want to have, as you said, Vince, some of the best companies in the world, and a lot of them are now on sale.
Yeah, but some of the panic you talk about when markets react like this is that people go, I just want to get out of the way. Seems logical, but it's fearful. And they do rebound usually pretty quick off those bottoms, because there is no green light, red light, right? At the top of the market, there's no flashing red. At the bottom, there's no flashing green. So you got to just stay the course unless there is some significant change to something you own or your goals and objectives change. But you really do need to just stay the course for the longer term.
And try to stay calm. And if you need hand-holding, that's the time to call your financial advisor. Call us.
Absolutely.
If for our clients and for those who aren't clients, if you want, to talk to us about your portfolios, we'd be more than happy to talk.
Yeah, Greg, you just made a good point about stocks in your portfolio. And, there shouldn't be any type of wholesale selling of stocks unless the company's fundamentals significantly change. And if you like the company, if you like their product, if you like their service, if they have a huge moat around that company, then it's going to then they're going to they're going to take the most market share. And it's when the fundamentals begin to change dramatically in a company, that's when you want to dump them for some stronger company, as Steve, you just said. But the other thing, and I don't know where it is yet, and you've mentioned this before about valuations of the market. A lot of these companies that were trading at 24, 25 times future earnings, I got to think they're now down around 15 or 16 times. I'm not exactly sure, but they're looking pretty good now, and the valuations are looking much more favorable to some of these companies. I don't know where they are currently, but they got to be close to that 15, 16 range.
Right. Well, right now, a lot of people who have sold, and I'm going to say it's probably more, I think it's more of the machines selling than it is individuals. But I'm sure there are a lot of individuals who are selling too. But a lot of them have gone into either cash or they've gone into some of the things like consumer staples. The companies that you have to eat, so that's going to be there. Even tobacco, I saw where so I heard somebody heard on the radio this morning says even in a recession, people still smoke
and they drink, right?
And they drink,
smoke and drink, and
they eat.
Go to the bathroom,
and you got to have, shelter and all that. So the things that you have to have, they're going to be there. And quite honestly, when I see the technology companies coming down, anyone want to tell me that we can't, that we're going to stop using our computers? No. Is anyone going to tell me that we're not going to need the newest chips? No. Okay. So at some point, and maybe we're there, who knows? At some point, you say, well, wait a minute here. Okay, we're not going to zero. And that's what I hear. What if I lose all my money? I hear that sometimes.
Oh, I hear that all the time.
Right. Well, if you lost all your money, that means everything went to zero.
Yeah.
And if everything went to zero, I don't think it's going to matter.
It wouldn't matter. Then you just need guns, ammo, bottled water, and canned foods.
That's right.
and that's what.
And maybe a vicious dog to keep people away.
I mean, and I hear that a lot. What if we go to zero? And I chuckle at it because no matter how bad the markets have been, and you look back over history, they've never gone to zero. Even in the Great Depression, it never went to zero.
Well,
It's an
honestly,
unrealistic,
Yeah.
Yeah, I mean,
scenario.
yeah, it'll go down. They go down, they go, and again, I think we're getting close. I think today was a big capitulation day. And here's the other thing: there is a Senate bill that may be passed this weekend that has permanent tax cuts, funding for the border, some other stuff that's in there that the Trump administration really wants. And according to Lindsey Graham, he thinks he has the votes to get it passed. They're going to do it in a way that they don't need any Democratic votes because the Democrats aren't going to vote for it. But the Democrats use this process during the Biden administration to get some very the bills that they wanted passed without having to have 60 senatorial votes. So I forgot what they call it. But
reconciliation.
Anyway, could be. I don't know if that's the term, but if it is, that's what they're trying to pass this weekend. Graham says, they're going to be voting all day and all night on Saturday. If that passes, then that might be an interesting catalyst for next week's market to see if we can't get something now positive.
Yeah,
we'll see. I don't know.
I think a lower tax bill isn't necessarily going to get people off of their fear.
No, but it gets but it's a positive.
It is a positive.
But it's a positive, and the way they're looking at it is they want these tax cuts to kind of offset the tariffs, or at least the revenue streams that they see.
Well,
So,
Trump is of the opinion that the tariffs are going to fund our economy. I'm just not sure that is workable, not at a very high rate.
Yeah, I even read something that they're contemplating a new higher tax bracket for anyone making over $1 million a year.
well, that's the two of you.
Not that is going to, pay for all, that is being destroyed by these tariffs, but there does seem to be there's a lot of changes from Trump 1.0 to 2.0.
Yeah.
Well, I think he's doing a lot of the things he wanted to do in the first term, but things are different right now.
A lot of difference.
When Trump was in the first time, remember we were coming off a whole different economy. People had some money in their pockets. They had low inflation. Basically, they had low taxes.
Yeah.
Then go to the Biden years, you had high inflation. And yes, the government spent money to give people money, so they were flush for a while, but that's gone. And so with the high inflation and people not having much money, when you get a slowdown in the economy, which this could very well lead to, a lot of people are talking about recession. And I have to laugh because, for 3 years we talked about, is there going to be a recession because of the inverted yield curve? Finally, the yield curve goes back to normal, and now we may have a recession.
Yeah, everybody's calling for a recession.
All right,
yeah.
so much for, the things that predict, including us. All right, so, but I just don't know if what he's thinking in today's economy is the same as it was back then. And, he's one of these people that likes the markets to go up. And I think when he sees the markets crashing, and 10% down in 2 days is a lot.
I got to think he's getting worried. He may put on a good face.
He's contemplating on Mar-a-Lago's golf course today, apparently.
Is he?
So,
Well, good. I'm glad. But I'm just saying the administration has to start getting worried about this market decline because investors and the American public, they're losing. Trillions of dollars is being lost in 401ks and IRAs and people who are looking at retirement funds and they're saying, hey, wait a minute, now we're down 20% in, certain markets. That's very difficult, especially if you don't have a lot of money.
Right, but let me go back to something you said. It's not really a loss until you say,
right, it's not until you sell.
I'm done. I mean, this is volatility, but it's extreme volatility. Yeah. I didn't look, I should have looked at the CNN Fear and Index screen, but I will almost, I would almost guarantee it's got to be close to
the
that
VIX is at 40. The VIX is at 47, 48.
And the VIX is what? The volatility
index?
That's
the volatility index. So
and 47 is
very, very bearish and fearful.
Right. And so that's where we are.
I'm sure your index
it
is
hit
probably
47 today.
47. I thought I saw it at 48.
Oh, wow.
Yeah,
it was a question. I didn't realize it was that high.
It was high.
Wow.
It's been chugging around 15, 16 for a long time.
Yeah, the last 2 days there's been a spike like you would not believe.
So that's 3 times the volatility, and that's a lot.
Yeah, I'm sure your index is probably flashing red big time.
We need an update next week.
You mean the CNN index?
Whatever that fear greed thing.
We need an update.
Yeah, because my personal index is not there. Okay, my personal index is still the same as it always is. If I've got quality companies, I'm not going to worry about it. I don't. Although Warren Buffett did predict that there might be a major whoosh in the market, and I think that's happening now. But he doesn't go out and say, "Oh, I'm going to sell all my stocks because the market's down." It just doesn't do that.
I don't think too many people thought it would be smooth sailing once Trump started placing all these tariffs in on other countries. So Warren Buffett has done a lot of great things over the years. But you and I and Vince, I mean, we've been around a lot of these cycles, and we like you say, your index is, if we got the right stuff at the right prices, we can ride through this. It's just part of the, it's part of the cycles we go through. And 2 years from now, like you mentioned, Steve, 3 years from now, you're going to be really happy you didn't make any emotional decisions in a time like this.
If you have cash, be ready. I don't know if exactly today is the day to buy something or Monday, but be ready because, Vince said before, I mean, the price to earnings ratios on many of these stocks have gone way down. Some of the ones that were flying high were at 60 and 70 times earnings, their price.
Yeah.
Now they're probably close to 20 or 25.
Easily.
And yet they may be growing at 50 or 40%. That represents a bargain for the long term. Now, could it go lower in the meantime? Sure. And markets do go lower sometimes on a lot of panic and you hear all the headlines in the news and, you get on TV and you'll see markets crash, this happened bad, you hear all the bad news and it feeds into a negative perception anyway. So our best advice is just keep your head, do not panic. If you're going to sell something, make sure that there's a good reason to sell it, and I do think that you're right though, Vince, for the people who are retiring right now, those are the people who are maybe hurt a little bit because they need X amount of dollars on which to live. So hopefully this, is something that won't last for a long time. Hopefully, they'll get in and start bargaining with whoever they want to bargain with on the other side, the Trump administration versus a million different countries, and that will cause this to settle down. In the meantime, best advice we can give you is just hang in there. And I know you hate hearing that from us. It seems like all of the financial advisors always say the same thing, and we always get, well, why should we hang in there? We're going to lose all our money. But I'm telling you that if you can hang in, and if your emotions cannot get the best of you, as we said, 2, 3, 4 years down the road, you say, oh, geez, I'm sure glad I didn't sell back then.
Here are my 4 quick points before we call this a day. Number one, the tax bill that's in the Senate. If that gets passed, I think it'll be a positive. We've got earnings season starting next week where the big financial companies, the big banks report on Friday. It'll be very interesting to see what they say. And then the big tech companies don't start reporting until probably the 3rd or 4th week of April. But it will be really interesting to hear 2 things. Number one, what's their guidance going forward? And with the price of their stock right now, how many up their repurchase agreements? And
how many do what?
Buy back their stock. Yeah, because I think that their share prices are getting dirt cheap, and in their quiet period of 30 days, they can't go out and issue they can't go out and buy new stock.
And when does that start? The quiet period? Before
30 days before their earnings period.
Right. So once earnings are out, they can go back.
They can go back. And I think you're going to hear a lot of companies say we're going to have, the board has authorized billions of dollars of stock repurchase agreements.
Well, this is where the Vickers Index, where they have all of the insider buying or selling. This is something to really pay attention to. Because if all of a sudden you're seeing a lot of the insiders start to buy, well, to me that's an indication that things are getting cheap, and not just getting options and converting options, but actually going in and using their own money and buying shares. So we'll see.
And that'll be big. That'll be big if they start repurchasing a lot of stock. I think we'll have a pretty good upside in the market.
Was that your 4th point or your 3rd point?
I think that was a
kind of 3rd and a half.
I think that was a 6th point.
No, that's my 3rd and a half.
How many points do you have?
Got a lot of points.
Got a lot of points.
All right,
he's a good
Especially on
pointer.
American Airlines.
So how many points is Duke going to beat Houston by? That's the big question.
As long as they win.
Well,
I don't know. When do they play? Oh, tomorrow night?
they play 2 games Saturday.
Who's
and then
playing?
Auburn.
Duke is
and
playing Houston,
Duke's
and
playing
Auburn is
Houston.
playing Florida. And our producer says that there's a 5-point spread on the Duke game.
I was just saying the times. It's 3 o'clock and 5 o'clock tomorrow.
Oh, okay. 3 o'clock Pacific time, 5 o'clock Pacific times when they're playing. And let's forget about the market for a while. Let's enjoy basketball. We've got the semifinals. We've done the Final Four coming on Saturday. We've got the finals on Monday. So let's try to enjoy the weekend. Play some golf. Do something. Get your mind off of this stuff. Meantime, this is the report on April 4th, 2025. We will be back next week, and we'll see where we stand. Thanks for listening, and we'll see you then. Bye-bye.
Please stay tuned for the following announcement. WWM Financial is a registered investment advisor with the SEC. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember, investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.